Here you go, MMT. You see the bid is 25.30 and the ask is 28.50. Now you want to know how to get in. I'm doing this live right now, and we have bids out at $22.80. And we have. And once again, it's a 4-5 weekly. They just opened today on Thursday. And MMTs have that lower markdown bid at 27.50 for one reason, that the weekly chart on the Nasdaq 100 will have a significant role in it. And we can clearly show here the Nasdaq 100 support level on a weekly level, which I don't mind doing very quickly. But I can tell you, as we got to the top, we were shorting it up here at the high in that wick. But now we're coming down to that lower end of that support level. And one of the things that I want to be very clear about as far as this one goes, that level of support is going to run right over here on the top where I have these trend lines. And there's 27.39, and there's the lower end, of course, that we have, which is around 27.46. We're currently printing 27.53, minus 17, because the bull needed to rest and it needed to pull back. So based on some of the analysis that we've been looking at, we are going to stick with the idea that that $6 markdown ratio in this weekly entry on a Nasdaq 100, people don't know how to get in here. They don't know how. It's 25.30 by 28.40. How do I buy it? MMTs are masters at below the market, and you can take a look at the high print. There's only 3 volume total, and they expire not this Friday, but the following Friday. It's a new weekly introduction, 27.50 call. Now, that's what the weekly looks like, and that's the bid and ask ranges. Once again, MMT, our bids at 22.80 will hold for now. And not only that, we do know that on a daily chart, the Nasdaq 100 has to come back and test its 10-day moving averages, and relative to what the spreads are between 10 and 20 short term, as how strong the support will be within the support levels of this Nasdaq 100. And right now, how do I get bids? And let me tell you, the only reason why we're good at it is because we understand a very expertise area of mathematical pricing scripts at wholesale. What? Bids that remove the dollar capital risk entry. Once again, that wholesale markdown is where you, as a market maker, are learning that that wholesale bid is where you sell higher to the public over here, and you get them to pay higher on the ask. Let that be known. How to trade Nasdaq 100 weekly, and I will show you the difference in the 27.50 call here on Nasdaq 100. You got 44. Now look, this is in April monthly. This is a monthly, and it's 44 by 44.90. Now listen, reason why I like this one on the monthly is because I got a print 51.80. Oh yes, I do, and I get to buy. I get to buy below the floor on the 27.50 call because I have a very big spread. And I will have my bids out here at 39.70 for now on this call side, that it is 3/29/2012 and it's 7:38 a.m. Pacific Standard Time. Now, once again, the reason why our live alert options, live hours, remotely now, and we will be opening up a international options trading floor so that all players can be involved around the world. Not only that, 48.90 is a high I'm going to look at the markdown on the calls. I will be wholesale. That's what the monthly 2750 call Nasdaq 100 looks like. Once again, my friends, and you're all very dear to me, as far as removing that dollar cost capital risk and being wholesale below the bid, during the bull pullback that we said that you would have to have a bull pullback, but where would you find the lower support levels on the 2750? Because it's inflated and it has to get marked down. On the Nasdaq 100, there's that 10-day simple moving average. Here's that 20 now. Let me tell you something. As far as the daily goes, you can see here where the top end of the reversals have occurred. Right here, because they have. And it's only day one. That was a narrow range move. You're going to test these moving averages. Remember one thing, that the 20 is always where wicks can go and hit and bounce rapidly off lows. That's always in the game plan with us, because that 10-day moving average has been rising, and it's going to have a support level where the public will look at making their transactions based on their data set of skills that they possess. And what they're given is that they look at these things and then they try to be figuring out what to do thereafter. We don't have any doubt. We will buy the support levels and we will mark down the entry levels. You can see that markdown 770 right now. How to buy a 2750 call on a monthly, and also a 2750 call, and what the weekly looks like this. You can see the differences in the two. This one has 27 volume, and it's a markdown at that wholesale bid. And how do I get on the call side wholesale all the time? Just like I get on the put side wholesale all the time. It doesn't matter. I'm always wholesale on whatever side of the market is getting marked down. So the bull is getting marked down to support levels, and that's how we get the great entries from these positions. Here we go in this live one. Here's what I'm going to talk about being wholesale on where that bull. And as we always said, on the Nasdaq 100 or any of the indexes, is that at some point you're going to have that upper end of that price action resistance that becomes what? Real resistance. Hardcore. And you can see that you were overbought on the 2750 call chart. Look at the here, MMT. Once again, I can tell you the reason why it's all good is that this high right here was $66 a contract. This high right here was $65. Now, granted, as I've always explained to people, that inflated price action has to come down, and that you cannot stay totally imbalanced in market indexes. And that, once again, when I'm buying down here, I'm wholesale, because these same contracts went from 28.70, and you had 10 of these, 28.70, and they went up to $66. Do the math. And that was in what? A 3-day move. But now the contracts were too inflated on the call side. And bam. Now let's take a look at the invert of that 2750 call, and let's take a look here at how deflated that the 2750 put got. And now the 2750 put, that weekly low was 24.86, and in the same 3-day period that market's been marked up to 41.10. What a whopper trade on the 2750 put markup. They finally had to get balanced. They haven't been open that long, as you can see. Now let's go back over to that monthly 2750 call. But now you can see how inflated and why we're so wholesale to our risk, wholesale to our entries on making markets. Here we are, 25.40 by 28.90. That's that 4.5 27.50 call with that Nasdaq 100 right there at that 27.56.54 handle. at 1 hour and 15 minutes in that opening print. 3 is the volume only. Once again, how do I walk away with the least amount of dollar risk? That's my wholesale bread and butter, and sell it back to the public. Now, if you want to get on board with that, go to info@stockmarketfunding.com. Get busy. If you want to get on board with this 421 monthly 2750 call here, that's the monthly one, and learning how to do that. And just remember, I just showed where the calls were in the daily chart, in a daily call chart. People never use them. They don't have them. They don't understand the prices. Don't worry, we do. So we're buying below the market here at that key support level. As they take down the premium, people never like them at the wholesale level. They're scared to buy them there, but they like to buy at the highs. 27 is the volume. And it's a complete special on 4/5/2750 weekly call pricing control versus the monthly 4/21 2012 2750 call monthly, and what the price premium ratios are between the two contracts. Same strike. And then you're taught mathematically, though, how to buy markdowns in bull rallies and how to buy markdown puts and bull reversals within bull rally markets.